Welcome. Today is the 19th of February, 2025. The YieldMax ETFs as well as Roundhill ETFs announced their distributions for their monthly and weekly ETFs, and I'll dive into what those are here. So first, to start off with the YieldMax ETFs, over on their X.com account, they have the payouts noted as such. You can see FEET, $1.90, FIVI, $1.12, SNOY, 92 cents, TSLY 60 cents, TSLY 58 cents, YBIT 55 cents, OARK 42 cents, almost 3 cents. Google's is 38, almost 39 cents. Crash 38 cents, and then Exxon 25 cents. And then as for the weeklies, we got the YMAX and YMAG at 18 and 13, almost 14 cents respectively. GPTY 32 cents, SDTY, one of the newer ones, 22 cents. And then their biggest pair for a weekly payout, LFGY at 57 cents. Then if you jump over to the Roundhill investment, X.com account page, I guess the first thing that, before I jump into what the distributions are, but they have these 5 new tickers that are trading. They're weekly pay ETFs focused around a single stock exposure. So if you go to their website here quick, which I did, and here's just an example of one, or perhaps I'll actually click their links to get the full list of them. But these will be interesting. I guess I don't know too much about them right now, but they're weekly pay ETFs offered by Roundhill. Expense ratio, I think of all of them is 0.99%. Looks similar to YieldMax's ETFs, which are focused on single stocks. But they say these are the first of their kind ETFs, which aim to provide weekly distributions and enhance returns equal to 120% of a given single stock's calendar week price return before fees and expenses. That's a mouthful. I'm actually not entirely sure what they're targeting by that. I'll probably just wait to see what a few weekly distributions are to see exactly how these are assessed and paid out. But the 120% of a given single stocks calendar week price return. So I'm not sure, will the distribution be equal to that? Will the return on the ETF be equal to that? Or will it be a mix of the two? I guess I'll see, and perhaps I could read a little bit more about these, but just based on a sample observation, they're interesting. But it looks like there's a NVIDIA one, a Tesla one, Apple, Coinbase, and Palantir. So I'll be watching these going forward. I think they'll be interesting to follow at least, but I guess that's a new ETF coming. But as far as the payouts, here we go on the Roundhill weekly ETFs. These ones are always pretty standard. You get the QDTE at about 24 cents, RDDT 20 cents, and XDTE at 22 cents. Then the Bitcoin one, YBTC, was once again pretty low, at least in my opinion, at 28 cents. And then if I take all these and put them in my spreadsheet, get the returns on a monthly basis or weekly basis, as well as a annualized return here. So I took the payouts for all the ETFs and I put them into my spreadsheet here. You can see payouts with announcement date of 2/19/2025. And the purpose here is to compare it to the current share price of the fund and see what the percent payout is from either a weekly basis, or in the group A here, it's a monthly basis. And then multiply those by either 12 or 52 to get your annualized returns. And then I guess use these to assess your performance of the fund, at least from a payout rate or an income generation ability. But so I took the weeklies from the YieldMax and put those in here. You can see what these are. And then I also have I have the payment from the previous week as well as a month ago payment, just for comparison purposes. But overall, YMAX, YMAG, pretty standard. YMAX is very standard, or has a distribution right around the mean distribution in like the 15, 20 cents range. YMAG's been jumping around a little bit, but back to 14 cents. Percent payouts, 1.1 and 0.75, or 57 and 39% from an annualized basis. And then LFGY has been, I guess it started off at 75, but it's been around this 55 cents to 60 rate, which comes in a 1.2% return for the week. Based on the current stock price, $47.66. Annualized rate will come in at 62%. And then GPTY and SDTY, pretty new ones. I guess these ones, payouts not super high, I guess relative. It looks high relative to YMAG and YMAX, but their base or price per share is quite a bit lower. So these ones you see from the percent here, 0.4 and 0.67%. So a little lower on the payout rates. We'll track those going forward, but that's I guess a quick entry. And then as for Group A, I guess my general opinion, anything from the 4 to, or when you buy these funds, I think anything the 2 to 4% range is pretty standard. And then once you start getting above the 4, maybe the 5, 6, 7, 8, even to 10% range, those are very nice payouts, at least in my opinion. It all does depend on the stocks, the underlying stocks volatility. So some of these funds you'll buy with a little higher implied volatility, you'll expect a higher distribution, but the fund's NAV will fluctuate more and could have more potential downside. So the risk return that comes with that. But I'm looking at these overall, these at 4.77, not too bad, but I know their NAV of the ETFs been on a downturn lately. CRSH, almost 6%. That's pretty solid. Usually I'd expect these are inverses of each other. So you'd expect the distribution, at least percent payouts, to be somewhat similar. I know there's been some people complaining lately that instead of just selling a call option on the upside in order to collect premium, YieldMax has been selling kind of credit spreads on the upside. So what that does is you get some premium from selling one upside call, but then you buy an upside call even higher. So therefore you give some of the premium back in order to buy the call that's at an even higher strike price. I guess what that does is it definitely lowers your distribution, but if there was a huge spike in the stock, I guess the underlying synthetic position would gain on that. So it's like buying a lottery ticket to the massive upside. I actually don't mind the strategy personally. I know a lot of people don't like it. If I was doing these myself though, that's the strategy I would employ, particularly on some of these very volatile stocks that go up and down, 10%, 15% on any given day or any given earnings report. But then we go to Google, 2.7%, pretty standard. You can compare it to what it was previously. So you can see like TSLY's down a little bit, Google's up a little bit, YBIT down a bit from where it has been. Interesting on that. That one's usually a pretty good performance as a percent relative to its underlying ETF price. 55 cents, at least historically, is a little low. Potentially, I'll look for that one to go a little bit higher. And then as far as some of these other ones, they're all pretty much in that 2 to 4% range. Exxon being a pretty low volatility, big company as the underlying stock for XOMO. That's always a pretty low distribution, but it's still annualized. It still comes to 20%. But I guess this was initially open at 20, so it has experienced some NAV deterioration. So let me just look at that. XOMO doesn't look like a very good fund to me, at least so far. And the fund that I think I'd rate the best, that's performed the best, has been the Snowflake, SNOY. Still at its initiation price of 20. Just announced a 92-cent dividend, which is 4.6%. And then over time, it's paid dividends. Those have accumulated to be a pretty solid amount. I got that analysis a little bit later. But Snow's been a very good fund as far as this strategy is concerned. And then TSLY, 60, 3.3%. And then Feet and Fivvy, 4% and 2% respectively. And then as far as the Roundhill funds, you can see QDTE has been like right around 25 cents. So pretty standard 0.6% payout for the week, over 30% annualized. XDTE, RTT coming at the low 20 to 25% annualized rates. And then the YBTC, that's similar to what it was last week as far as the distribution, but 0.6% for the week or 31% for the year, but definitely lower than it has been over time. As all of these, I'll continue to follow them and expect that one to go up a little higher in the future. But then to jump, so taking that analysis and jumping into Group A, what I've been doing for all of these, I've been collecting the distribution history from the YieldMax website and then plotting them just to see respectively what the dividend is now to the past. Some of these stocks, or some of these ETFs, I should say, have experienced NAV deterioration. And in such a case, one would probably not expect to get as high of a distribution if the ETF has experienced significant NAV deterioration over time. That's something to consider. But over time, you see, I guess Google's been pretty consistent. Snowflake, been pretty consistent. I say if it averaged maybe about $1 a share, quite good. And then some of these other ones, I know Feet and Fivy I don't got a chart for because they haven't really been paying dividends for 2 months. So I figured I might add one later, but for now I don't have one. TSLY, pretty standard. TSLY, so here's a stock that's recently experienced some NAV deterioration. And I think this chart is right. I know they had a reverse split. I think the here in yellow is pre-reverse split, and the black is post-reverse split. They said the numbers are adjusted for the reverse split, so I just plotted them in. I'd have to go back and check to make sure that's actually accurate. But TSLY's a little bit on the low end, down at 50 cents. Recently it was as high as almost getting close to $1.50. I think some people are a little disappointed on that. And then OARK is actually, their NAV has gone down, but I guess recently, as far as the percentage, the roughly 40 cents a month payout's been pretty good relative to at least the share price, which is around $12. So as a percent, not too bad. YBIT, as I mentioned before, a little bit on the lower end of where it has been. And then here's your Exxon, just stampeding along as usual, very consistent right around 30 cents a month. And then in addition to just plotting the dividend, I also took a look at some of these. This is just some quick analytics. Basically what I did is I summed up all the distributions. So for example, Google, summed the distributions since inception, 9/7/2023 till today. And you can see they've paid $7.61 as a payouts, or I like to call them dividends. They're not really dividends, they're more premium distributions, at least in my opinion, but I guess you could think of them as dividends. As far as the current price of Google, it's at $14.37. So if you were to add those two together, assuming no dividend reinvestment, coming to $21.98. It did have an inception price of $20. So you can see over the 19 months that this fund's been in trading and I guess active, you've had a 9.9% return, which let's just assuming no reinvested dividends. I'll do this analysis again. Reinvesting the dividends, I'll probably write some code to do it. So I'll just pull it all in and output it. I figured I'd do it by hand here just so I get an initial read of what I'm expecting, but I'll put some code together to pull this information in, and I'll output some nice visuals as well as return or quantitative return figures. But I basically did this for each fund. You can see Feet and Fivy both have paid a couple months now, $2 and $4, but NAV deterioration makes the total return on these negative. And then Snow's been active for 9 months. Currently right around its inception price of 20, but it's paid $7.58, almost 59 cents in dividends or premium distributions. So the 20 effectively turned into $20.59, almost 60 cents, which gives almost a 38% over the 9 months. So pretty solid return. That's why as far as Group A, I'm going to have to, this is definitely the fund that has produced the best. And then TSLY, we're at about a 10% return over 6 months. TSLY, I started this as red. I'll have to look at the math. The reverse split, I think I took those numbers into consideration, but I have to check it out. But reverse split, inception was originally 20. The reverse split, so that pushed the inception up to 40. If you sum up the dividend and the current price, we're at 43. So over 27 months, 8.6% return. Not very solid for the time frame considered. That's over 2 years. The payout's been very good, but the NAV deterioration's been terrible. Kind of takes away it shows the downside to some of these funds. And then YBIT, we're at 4.5% over 10 months. OARK, 15.4% over 27 months. And Crash, we got the negative return. And then Exxon, basically all the dividends have almost done nothing but recruit NAV deterioration. So over 18 months, we're at almost flat. So Group A, as far as the funds are concerned, probably not the best group other than SNOY. But just wanted to point those out. I'll make the visuals a little better going forward, but thought that'd be something interesting to consider. And then I think that's all I got for today. I'm also doing the weeklies. See YMAX and YMAG, since going weekly, been very consistent. YMAX is more centered upon its average, whereas YMAG more has those ups and down fluctuations with it. And LFGY has been pretty standard. Slight decline, but around the 60 cent per week. This one, I think, is very good fun for someone looking to gain that weekly dividend or payout distribution, at least from a percentage of what the fund's underlying value is. But we'll look to add to this going forward. Thanks for tuning in today.